안녕하십니까. 삼성 코덱스 ETF 김도형 본부장입니다. 오늘 이 시간에는요, 정말 만나 뵙기 어려운 분을 모셨습니다. 저희 삼성 코덱스 미국 배당 커버드콜 액티브 ETF, 김치디보라고 불리는 이 ETF를 포트폴리오 자문하고 있는 미국의 CWP 케빈 심슨 대표를 만나보려고 합니다. 우리나라에서도 잘 알려져 있는 디보, 미국의 디보 ETF를 운용하고 있는 운용력이기도 한데요. 본토의 배당 투자 전략은 무엇인지, 그리고 올해 어려운 투자 환경에서도 높은 수익률을 기록을 하였습니다. 그 비결은 무엇인지, 배당 투자 전략, 한국인들에게는 어떤 메시지를 줄지를 제가 한번 지금부터 인터뷰해 보도록 하겠습니다. 함께 가보실까요? Hi, Kevin. Thank you for taking the time to speak with me today. To start off, could you briefly introduce yourself for our Korean investors?
Thank you for having me, Do Young. My name is Kevin Simpson. I'm with Capital Wealth Planning and Amplify in the United States, and we are part of the management and portfolio team for the KDIVO.
Dividend investing in Korea is often associated with legacy sectors or low valuation names. How is KDIVO's dividend strategy different?
Well, let me first say this. Here in the US, dividend-paying stocks are very similarly considered as a boring place with low volatility and are very hard to write covered calls on in the most traditional sense. So what's great about KDIVO is that we're not looking for those big highest paying dividends. What we care about is strong dividend growth. Because if we have companies that are increasing their earnings and then can increase their dividends because of that growth of the earnings power, first of all, we think that that's a 1-2 punch, but also we expect that the stock price should appreciate along that pathway. You also have the ability to participate in some companies that might have, although lower dividends, strong growth potential moving forward. So it allows us to have a little bit in the growth side of the equation and not just to be mired in high dividend, boring companies that not only have low beta and weaker option premiums, but also one could make the case could be more challenged in a rising interest rate environment or even an environment in which there is an interest rate. Because when interest rates are at zero for 12 years, it's great to own those high dividend paying stocks. But when you have a competitive landscape with the bond market, it makes it even more challenging to simply be a deep value, high dividend manager. And that's not what KDIVO is. KDIVO is about rising dividends, not high dividends.
From now on, I just want to ask to you about covered calls and dividend strategy. Some investors feel covered call strategy kept the upside. How KDIVO's approach is different?
We will admit that even in KDIVO, we will cap some upside, but it's very important that we capture most of the upside. And one of the big differences between KDIVO and our competitors is that we're not writing covered calls on every position in every single market all the time, because I always think that it's silly to expect that every single day in every single market that it's a perfect and ideal reason to write a call on every stock in every sector, because there are certainly instances at which it makes sense to write calls, but there are also times where I think it can be counterproductive, almost to the detriment of the upside capture. So we look at every position every day with the hope and the intent that we'd love to write a covered call, but we put a number of rules in place to make sure that if we do write a covered call, it's going to allow us to participate in a lot of the upside, knowing full well that we'll never outperform to the upside. But if we capture again most of it, then we'll have very, very happy investors.
Let's move to the next questions. Korean investors appreciate how KDIVO defends in downturns and participates in rebounds. How do you manage it during recoveries?
It's a little bit trickier because when we're seeing a recovery, depending upon the trajectory, if it's a slow and gradual improvement, and the trajectory is narrow, it's easy. All the covered call writing that we do is very stress-free because we're not seeing things getting called away. We're enjoying the appreciation and we're enjoying the option premium, not to mention all the dividends that we collect along the way. Where it gets trickier is in a rising market where there's a very sharp recovery. And we saw that in 2020. We saw that in April of 2025. And thinking about the last question where we are very careful about the call writing to stretch it out when you have a big drop in the market, it allows us to participate in a good deal of that recovery. Now, we know we're not going to be able to participate in all of it, but it's always our endeavor to try to capture a lot of the recovery. And if we can capture most of the upside of the market and only forfeit a little bit, but more importantly, protect most of the downside, then we feel like that's the most beneficial results that we can provide our investors.
And after next two questions are very important to our Korean investors. So, is accumulating KDIVO alone sufficient for long-term income-oriented investors in Korea?
That was a good question. I think that anytime you're investing, diversification is important. And as much as I love KDIVO and our US equivalents of it, and as much as I have most of my net worth in this strategy and believe in it with tremendous passion, I think that it can be a large core allocation for equity income, for income investors within their equity sleeve. And I think like any sound investment process, diversifying it with some complementary investments would be the best way to answer that question. But you can certainly make this a large allocation for equity income with great comfort. And then in the way we think about it here is if it's a hub and spoke, we think of KDIVO or our US equivalent as the hub, and then you tack on other investment sectors or asset classes around it to build a quality diversified portfolio.
As you know, KDIVO invests in S&P 500 in the portfolio. So, could combining KDIVO with S&P 500 enhance diversification and risk-adjusted returns?
I think that's one of the coolest things about KDIVO is that it does give us that broader diversification, which is very powerful when markets are going up. It's even more so. And with the components that encompass KDIVO around that S&P component bring down the risk profile. So many traditional investors who aren't familiar with KDIVO or covered call writing, the allocation to the S&P is a very common way to get asset allocation in equities. The best thing about KDIVO is that it gives you that, but it brings down the risk profile with all of the other things we're doing around it.
Could you share the latest updates to your portfolio strategy?